Hello, welcome to another episode of On the Floor with Wayne and Rob. I'm Wayne Highlander at Bona Adhesives.
I'm Rob Johnson from the Bona Training.
How we doing, Rob?
I am doing fan freaking tastic this week.
Oh, I got a text message from you. And I'm sorry I didn't respond until the next day, especially after you sent me a message like that.
That's okay. Well, yeah, I had a good work week, but my gosh,
Can I read your
what happened on Sunday morning, man?
what happened?
Oh my, yeah. Oh, come on.
Oh,
You don't see you don't see
the
the flag in the back?
oh, you talking about the hockey game?
Yeah.
Yeah, that was pretty awesome.
Did you watch it?
I did, here's how much of a hockey fan I'm not is I just was watching TV and came across him. Oh, the hockey game on. Oh, that's right. It's a gold medal game. So,
Oh my gosh.
it was 3 minutes or 4 minutes into the game when I turned it on, and it was incredible. Listen, and it says so much about the Canadians that, it means more going through the Canadians than anybody else because they're so good. They're so talented as a team. Man, it was both of them played their hearts out and could have went either way, but it went the USA's way, and I thought it was a fantastic game. And just the spirit of the game, you know what I mean? That's the way sports is. There's no money it's just this love of the sport and the competition. It was awesome.
I sent, we have Sunday dinner with the family every Sunday. So Saturday I sent the text out like no Sunday dinner, but breakfast is starting at 7 a.m. A few people thought I was kidding. And I'm like, no, the gold medal game starts around 8:15. So
Hmm.
Pauline saw the text. I didn't even mention it to her. She saw the text. She's like, the hell are you doing 7 o'clock in the morning? I go, no, we're gonna have to be up around 4:30, 5 o'clock,
Hmm.
cooking and prepping. I go, the game starts at 8. I go, this is history. This is gonna be one of those games where people are gonna say, where were you? And I said, and I
Yeah.
want all the kids and grandkids to say, oh, I was at my grandfather's house and we had a big party. It was so awesome. I just read an article about that team too. And I love Canada. I love working up in Toronto and
Of
Montreal. We have a
course.
lot of good
Yep.
friends that we work with and everything. So in no way, because one of them said, "Hey, well now you're gonna make fun of us. You get to bust us and gloat for 4 years." I go, look, I'm a Boston fan. Okay, we don't do that.
Mm-hmm.
We know pain. Okay,
Yeah.
we know pain. Hey, it was our turn. It happened for us. You know, fantastic. But one of the articles I just read, and in no means am I disparaging Canada, but the American team stayed in the Olympic Village with the other players.
Hmm.
Team Canada didn't want the distraction, so they stayed in some hotel that wasn't in the village. And the I've seen more interviews with the American players saying how awesome that was that they just stayed in the dorms. The Kachuk brothers never closed their doors. They were open the whole time. They were out, hacking around with all the other athletes and everything. I'm thinking, how cool was that? For the say you're just some kid who barely made a team, and you're not a millionaire hockey player or anything, and all these guys are there. So that was uh that was something. That was just something
Yeah.
special.
Yeah. I don't think you can say that was like, okay, that's led to the strategy of why we won. You know what I mean? Because the game is so close. I mean, after all, it was tied after 3 periods, right?
Oh, I don't think it was why. I don't No, I'm not saying that's why we won. Hey,
Okay.
that game was a coin flip. I mean,
Yeah.
we don't have a goalie who stands on his head.
Yeah.
You know what I
Uh,
mean? There are some shots that
I mean, it's
they
a hit.
they should have been in. I mean, that
Yeah.
that game should have been about, maybe 3-1,
Yeah. Yeah.
But
Um,
hey, man, when you gotta anybody who knows hockey knows that when when you get even in the original game, the 1980 Olympic, there's a clip right before Eruzione scores to make it 4-3. There's a clip of the announcer saying they're relying way too much on Jim Craig tonight.
Hmm.
So,
Yeah.
a goalie can just keep you in that game. I mean,
Yeah.
not only did he keep you in the game, but he won the game, man.
That's
Hughes scored the goal, but
a lot of shots on goal for sure.
oh my gosh.
When they brought out the two kids at the end, that was pretty damn special, man.
Oh,
And I don't care what side of the
oh
coin you're
my.
on. Yeah, that was pretty
Did you know
special.
the story of that?
I vaguely got it, and I'm going to take this thing off my head now because I don't wear it's too hot. I don't wear headbands, but no, but go ahead and tell me.
The two brothers, the Gaudreau brothers, were riding their bike the day of it was either the day of or the day before their sister's wedding.
Oh man.
And they were hit by a drunk driver and killed them both.
Oh my gosh. You
So,
kidding?
he's got kids, he's got his brother, they're going to their sister's wedding. I mean, it's like you got to be kidding me. Right? I
Yeah.
mean, just start piling, but when they brought his kids out there and he would have Johnny Gaudreau would have definitely made that team, probably would have been captain of that team.
Hmm.
And that's why it all was so, you know, just an
Well,
incredible thing.
I
It was
know
just
he.
what a spectacular day.
Yeah.
And all the Canadian guys who know me up there from doing schools and our and buddies that we work with and everything. And by no means am I gloating. I'm just saying,
Yep. 100%.
it's the great part is too, it's what a shot in the arm is going to do for American hockey, USA hockey. I mean, it
Yeah.
did in the 80, in 1980, and now you're going to
Hmm.
see it again. So,
Yep.
that's
Uh,
my game. So I was pretty psyched about it.
yeah. Yep. Good deal. Hey, you sent me a
Wait,
text
wait,
message.
wait. One
Go
more thing.
ahead. All right.
Check this out. I had this out. I don't know if you can see it.
Yeah. Sports Illustrated. 19, is that from 1980?
That's from March 3rd, 1980. I
And
keep it in this.
you, I'll be darned.
So I broke it out,
Wow.
let everybody look at it.
Wow. That's pretty
That's the
cool.
original. Yeah,
And
the original Sports
you saved
Illustrated.
that from that date.
Yeah.
You didn't. Wow. Pretty
Yeah,
slick.
46 years old. You want to see the back cover? Look at the back. Look at the cigarette
Wow.
ad.
Wow. Give you $30 for it.
What's that?
I'll give you $30 for it.
It was a buck and a quarter.
Wow.
I know. Buck and a quarter.
All right. Before
Oh,
we get,
shout out to USA Hockey.
yeah,
What a day.
yeah. All right. Before we get on to our show, we're going to get on real quick and everything. Do you mind if I share the text you sent with me? You sent me over the weekend.
Yeah. Yeah, go ahead.
All right.
Hell, we shared the diaper story. So,
Well, yeah.
what won't we share?
Well, Rob sent me a text message of him in a gymnasium floor being coated. And his text is, I think I'm one of the luckiest guys in the world. I get to wake up every day, put on comfortable work boots and a clean pressed uniform, go to my job and teach guys how to do man all day and get up and do it again. Yes, I know the wife and family too, but work wise, no one's got it better than me. Trained a gym crew today on site and it went fantastic. So that's pretty. I love a guy that loves his job, man. That's awesome, Drop. Pretty cool.
It was a good day. I felt good.
All right. You and I never get it. We never go do a deep dive on stuff like this. And I don't even know how we're going to do this. I think you just take it one step at a time. And it's going to be maybe complicated a little bit, but we'll try to go slow here. And I think one of the mistakes that contractors make sometimes, and listen, first of all, I'm not giving advice. Me and Rob are not accountants, CPAs, financial advisors, in any stretch of the imagination. But And I think we've made all these mistakes that we're talking about here. So we're not preaching, above anybody. But oftentimes contractors kind of get it backwards and they want growth for growth's sake. I want to get more business, more jobs, more crews, more revenue, and then try to figure out if it's profitable or how to make it profitable. So I think we're going to talk today about um, markup versus margin and your markup factor on jobs and that type of stuff. Okay?
All right, wait a minute now. Let me break in here again. I'm not going to talk more about USA hockey. We just do a whole show about it, but
Okay.
you know, I'm I sent an email to Jack Hughes, see if we can get him on the show, maybe at a later date. We might have
Probably.
to settle for somebody else, but
Yeah. Yeah.
shoot for the top.
Yeah.
Wayne called me and sent me this email and pitched me on this show. And he's like, "Do you think that this is going to be, a little above what we usually do?" And I said, "Look it, this is information that you and I could have used when we were contracting. This is stuff that we just never thought about, and I wish I had." But I said to him, if anything, if this drives people to go get the book that you read, right?
Mhm.
The book that you read, because Wayne calls me and he goes, "I read this book all weekend and I'm taking notes." And I'm like, wow, this guy's, you know, he's pretty excited about this. And I know it's not going to be the most glamorous of the on the floors, but like I said to Wayne, if this drives people to go out and get that book and then ending up making more money doing wood floors, then, you know, on the floors done their job.
Yeah, and the book is called Profit First for Contractors, and I'm holding it up now. And
Profit,
Profit
profit
First
first.
by Sean Van Dyke, Dyke. And I was at the International Builder Show last week, and I bought a couple books for the ride home. One of the other is this called the Service Culture Handbook. It's okay. But this one I thought was really good. Then I started thinking about it, and what I like about what this guy is proposing is really different than most anybody ever that I've ever known has approached how to make your company profitable. And one thing he says, and I'll get into this later, is to open up five different checking accounts and set up five different checking accounts for your business. One is for income, two is for profit, three is for the owner's compensation, four is for taxes, and five is for operating expenses. But one that for profit, even if you only start out at 1% profit, make sure that you pay that, and you make sure you pay those in order. But I don't want to get too far ahead. I'll get into that a little bit later. And stop me, Rob, if I'm going too fast or whatever. So all right. So
Do you mean too
again,
fast for me or too fast for?
well, this is it's not that
Yeah,
it's
okay.
it actually is not complicated. It's really not that complicated, but we don't sometimes take the
No, I
time
was
to,
reading through your notes. It isn't. It's not.
yeah,
But
it's just
when I
it's
started reading through the notes, that's when I sent you that other email of what I had done this week, so I could
and
take a
if
look at that.
and if none of this works out, I do have a separate retirement plan we can talk about. So don't let me forget to go over that plan. Okay?
That the New York State Lottery.
No. All right. Markup in and margins. Um, they're not interchangeable words, for one. And I'm just going to read off the bullet points of the notes that I took. Okay. And actually, somebody, if they wanted to email me, I could just send them these notes if it helps. This gentleman says if you could teach only one thing that would make a difference, it would be the difference between these two. If you just teach one thing in business, it would be the difference between markup and margin. Markup is the amount of money you add to your cost of goods whenever you see cost of goods in a business book, it's usually expressed as just COGS in capital letters, cost of goods. So markup is the amount of money you add to your cost of goods to determine your price. Margin is the space between your price or income and your cost of goods. So on your profit and loss statement, and we'll get into profit and loss a little bit later, you'll see a line a line below your total cost of goods called gross profit. Gross profit equals income minus your cost of goods. And even cost of goods, we'll get into what is actually cost of goods versus what is an actual expense for your business, okay? So the gross profit is all the money you have left to pay for your expenses and have a net profit left over. It's going to get a little bit more interesting here in a minute.
Well, when I was
So,
reading your notes, I was pretty happy. A couple of minutes in, I kept reading it, going, "What the freak is cogs?
yeah,
What the
yeah,
hell does he mean by cog?" And then, oh, cogs, cost of
yes.
goods. And I was at the Jiffy Lube when I was reading this.
Oh, there you go.
I almost started, showing the guy next to me, "Hey, you know what
Hmm.
cogs means?
Yep.
Cogs is cost of goods, bub."
All right. So the gross profit is all the money you have left to pay for your expenses and have a net profit left over. The gross profit is your gross margin. Whether your gross margin profit is enough to pay for all your expenses and leave you with enough profit, leave you with enough of a net profit to run a sustainable business is yet to be determined. Okay. So we'll look at that. So let's determine what your margin needs to be and the markup that will yield that margin. If you take a look at simple math, okay? So let's take $100, for example. You buy something that costs you $100, you mark up the cost by 20%. All right, so let's say that's your wood flooring, for instance. It's $100. Now we know that's wood's more expensive than that, blah blah blah. But let's take $100 for example. You buy something, your wood flooring costs $100, and you mark up the cost by 20%, and you sell that for $120. Okay,
So I buy
so
$1,000 worth of wood for somebody.
mhm.
I'm gonna charge. I should be charging them $1,200.
Well, maybe, maybe not. You don't know what your markup factor is yet. Okay.
Ah,
All
okay.
right.
All right.
All right. So again, you take this example as $100. You buy the wood for $100. You mark up that cost by 20% and you sell that for $120. Okay. So
Got it.
that price equals cost times markup factor. It equals $120. That's 100 times 0.12. Okay.
Hmm.
If the cost of your thing was $100 and you sold it for $120, then your gross profit is $20. Okay, so the gross profit equals the price minus cost. Okay, so the price is $100 minus the cost equals $120. Is $100. Okay,
Yeah.
but here's the mistake that, and this is what I'm getting at right here. Here's the mistake that most construction businesses owners make. They say something like, I marked up my cost by 20%, therefore I made a 20% profit. All right. That sounds very reasonable, right? I marked up my cost by 20%. All right. He took the wood, it was $100. He marked it up by 20%. So he thinks I made a 20% profit.
Hmm.
This is not correct. This is wrong. You didn't make a 20% profit. You made a 16.7% gross profit. Okay. You don't sell your cost, you sell your price. Okay. In order to determine the margin in this $100 example, you take your gross profit of $20 and divide by the price of 120, not the cost of $100. See the difference?
No,
Okay.
this is where you lost me
Okay.
when I was reading it.
So you're
Where
taking
I mark it up, I mark it up 20%.
yeah. You're marking up
Okay.
the $100 by 20%, right?
Right. That's my markup.
Yeah. Um, so in this case, what you do is you take the $120,
Okay.
okay, and then do
Yeah.
your math on that instead. Make sense?
Hold on. See, I'm trying to figure out where you got the
So
16.7.
okay,
So
so
I got a
so
calculator. So you got 120 bucks.
okay, do 120 divided by 100.
1.2. That's we also teach people how to exercise. I think it's the other way around. I think you
No,
go
no. So
120, 100 divided by 120.
you do
And
in
then
order to
it's like
turn
18
you
or
take your
84. I bet
hold
it's like
on.
84%.
No. In order to determine the margin in this $100 example, you take your gross profit of $20 and divide by the price of 120, not the cost of $100. Okay? So you do $20 divided by $120, do that. It should be 16.7.
16.7.
Yeah.
Point
Okay.
point one six 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 six
Yeah,
six.
which is 16.7. So that
So it's
20% markup you did yields a
no, it's
60,
point 17.
it's 16.7.
You got a calculator?
Yes.
You told me to take $20
Hang on, let me get my calculator.
and divide it by 120 equals
Six
point
one
point
point
17.
0.166667, which is basically 16.7. Don't get hung up on a fraction of a percent.
No, I'm not. 16.7 would read
Oh, for
16.7, right?
oh gosh. Hang on a second.
So this is telling you that you made 16% or 17%, not 20%.
Yes.
Okay. All right.
Yeah. All
There
right.
we go. All
So
right. Now I see where you got it.
okay. But here's the thing. That might be okay. That might be all your business needs to pay for your cost of goods and your expenses and all the other thing, your taxes and everything, all your
Yes.
overhead, and make a profit. But you don't know that yet. Okay. But
Right.
at first you have to determine how to figure what the difference between markup and margin and how to get it. Okay. So in
Got
the
it.
first example, he goes, "Oh, I'm just going to mark it up by 20%." And he thinks, "Oh, I've got a 20% profit." Okay. So now to determine what the difference between that and margin is, you take the $100, in this example, take the $100, you take the gross profit of $20 and divide that by the price of $120, not the cost of $100. Okay. So now you're sitting with a 16.7 margin. Okay.
Right.
If you make the mistake dividing by the cost instead of the price, so that's what we did. You divide it when you just do the percentage, you just did it by the cost instead of the price. When you determine your what's required markup for your work, then you'll be losing money. Okay, let me say
Got
that
it.
again a little bit better. If you make the mistake dividing the cost instead of the price when determining the required markup for your work, then you will be losing money. Okay, a 20% markup does not yield a 20% margin. I think that's the biggest takeaway.
All right.
Okay.
Yep. I
If
got
you
it.
if you need a 20% margin to pay for your expenses and leave you with a net profit, then you will need to mark up the cost of goods by 25%. Okay.
All
So,
right. So
okay.
wait. I'm going to do that. We're going
Okay.
to go off of the 100,
Okay.
25% markup.
Yeah. That's a
That makes my price 125.
yeah. So that the
So
markup factor.
now I'm gonna do 25 divided by 125. Hold on. 25 divided by 125. That's 20%.
There you go.
So if
So
you need a 20% margin, your markup was really 25%.
yeah. Okay. So
Mm-hmm.
the cost of goods equals $100. In this case, your markup factor equals 1.25. So
Right.
price equals $100 times 1.25 is $125. Gross profit equals price minus cost of goods equals the 125 minus $100 equal 25 margin equal gross profit divided by price equal 20%.
So you can't figure out your margin until you know what your markup is.
Well,
Yeah. Yeah, you
yes,
can't.
yes. You got to know what, yes, yes,
You got to figure out what your markup is before you know what your margin is.
yes. If you go to www.profitfirstcontractor.com, there's a PDF you can download. You can take it with you, take a photo of it, print it out, tape it to your computer, what have you. Um, so there you go.
Say that one again.
www.profitfirstcontractor.com.
WWW. I can't remember the last time I heard somebody say
I know.
WWW.
That's right. All right. So again, your margin or your gross profit is the space between your price, your income, and your cost of goods. This space needs to be larger than your expenses. If it is, then you will show a net profit. Okay. So the most important equation you need to know for your business is price equals cost times the markup factor. Okay, so you got to know what all your overhead is. We'll get into that in a minute. All your expenses and everything, and then you determine what your markup factor is. All right, the price of your projects, of any of your projects. When you give a bid out to somebody, the price of your projects is the sum of your cost of the project multiplied by the markup factor. The markup needs to be high enough to pay for your expenses and leave you with a net profit. Okay. So your cost of goods for your business is typically the cost of your labor, your material, your subcontractors, if you have them, and equipment. These are things that you got out to the job site and you left them on the job site, the flooring, the finishes, the material, the sandpaper, and all that stuff, right?
Right.
So if it's not a cost of goods, then it's classified as an expense. Those are two separate items altogether. Okay. The difference between cost of goods and an expense is a simple way to determine that. If you buy it, mark it up, and sell it to your customers, and it gets left out in the field, like flooring, in this case, always going to be flooring, what have you, it's most likely a cost of goods. Okay.
Finish, sandpaper,
Yep.
scraper blades.
Yeah. For example, you
Okay.
buy the material, let's say some flooring for your work, you mark them up, you sell them to your customers. Those materials, they're all cost of goods. Same things applies to your labor. It's the cost of good. You, air quotes, buy labor from your employees, you mark it up and sell to your customers. Labor is a cost of good, right? These
Mm-hmm.
things, or the result of these things with subcontractors, any equipment, whatever, is considered cost of goods. Okay, what about cell phones? You don't sell your cell phones, but you certainly need a cell phone to operate your business. Since you don't buy it and mark it up and sell cell phones, that money you spend on your cell phone is an expense. It's not a cost of good. Okay, it's just an expense. Another example is food. For instance, if you take customers out for lunch or whatever, you did those type of things, you're not marking that up, you're not selling it to them, but it maybe generates business or income for your business and whatever. So it's an expense. It's not a cost of goods. Okay, got it?
Hold on. Cell phones are expenses.
Yeah.
Food.
Mm-hmm.
Now it's gas.
That
Cost of
that
good.
That's
or
an
is it an
no,
expense?
it's an expense because you're not selling your gas, right? You're not marking it up and selling it. So
Okay, so all right. So now I'm getting all right. So cost of goods is anything that you mark up and leave on the job.
yes,
You're not going to mark up gas.
correct.
Okay. Gas, cell phones, food, water,
Yeah,
safety equipment, safety gear.
yeah,
Those are expenses.
yeah.
All right.
Okay. Now
Yep.
let's define the markup now. The markup is the amount of money that you add to your cost of goods to determine your price. The markup is often expressed as a percentage. For example, let's say that you're estimating your cost of goods to be $100,
Yeah.
and you wanted to add a 50% markup to calculate your price. You would multiply $100 by 50% and add the product of that formula to your cost of goods, and your price would be $150. So basically, you go step one is $100 times 0.50 equals $50. Step two is just do $50 plus 100 equals $150. That would determine your markup, but you don't have to do it in two steps like that. Maybe I made that more complicated than it had to be. You could eliminate a step, and let's see, instead of multiplying the cost of goods by the markup and then adding that number back to the cost of goods, which is a two-step process, we can simply multiply the cost of goods by the markup factor. We haven't determined what that is yet, okay? And get the same results in one step. For example, using the same numbers as we used earlier in our cost of goods as $100, our markup factor is 50%. All we have to do is do $100 times 1.5, okay? Uh, to get you the 150. Does that make sense?
Yeah.
Okay. So again, net profit is the money that remains after the cost of goods and expenses are deducted. So that formula is net profit equals income minus cost of goods minus expenses. Now, there's something very interesting when you talk to an accountant that I got out of this book, and that most construction companies get wrong when it comes to CPAs. I'll get to this a little bit later on, but I found it to be very interesting. Where most owners take a draw from the company, not a salary. But at the end of the day, it does on the balance sheet, it doesn't give you a really accurate look at your and they do that for tax reasons. But at the end of the day, it doesn't give you a really accurate account of what your costs are. And so we'll get into that a little bit later on, but I thought it was very interesting. Okay. So you with me so far?
Yes, I am
Okay.
now. Yeah.
Okay. So, and I think you have to let this go through this whole thing and it all kind of comes together. Okay. All right. So net profit is the money okay. So I talked about that. So the four main areas that give us information to determine how the business performs are also known as a profit and loss statement. Okay. Number one, it's the income, which is the total revenue. Two is the cost of goods. We talked about that being your labor, material, equipment, subcontractors, whatever. Three, expenses, general expenses, office equipment, cell phone, shop expenses. Four, your net profit is income minus cost of goods minus expenses. Okay. So if you think about it, every proposal that you present in the form of a bid to one of your clients is a mini profit and loss statement for that project. In order to prepare a proposal, you estimate your cost of goods on the job. You apply a markup factor to those cost of goods that pay for the portion of expenses that your project incurs and leaves you with a net profit. Okay, the only difference is hopefully you're not showing the customer your cost of goods. Construction is a cost-based business. In order to make a profit, you must calculate your cost of goods and apply the appropriate markup factor so you can pay for your expenses and have a net profit left over. I think one of the biggest mistakes, and I knew very early on that I estimated my costs rather than I really dialed down. And we had Chris Ziz on the show one time, and this is where he did that exercise where he puts everything in a bag on a job. All the edge of your dish you do on a bag. If you change the scraper blade out, throw that in the
Yep.
bag. If you use a
The bag of
file,
rubbish. Yeah. The bag of
everything
rubbish.
everything goes in the bag. Because I think we want to we want to think that we made a lot of money on the job. So, maybe don't put some of the stuff in there. Maybe you didn't put this, that bundle of wood in there in the storage because it was left over on another job or whatever. You know what I mean? And
Yeah.
I know I was probably guilty of that. I know I was guilty of that. Of
How
not,
many times did a homeowner gives you a check and you make 12 grand? No,
yeah,
no,
no,
I had $5,000 in wood.
yeah.
I didn't make 12 grand. They're thinking it was 12 grand.
Yeah, and sometimes your employees think you made 12 grand, but and in fact
Yes.
that often happens. Let's say an employee picks up a check from you, go, "Wow, we worked on this job, and Bob gets
Yeah.
it's $8,000." Well,
Yeah.
and it's
Right.
usually like you said, it's the wood was 5,000. It's usually that's not what gets you though. It's all the small things. It's the gas back and forth to the jobs. It's all the smaller things that add up over time. All the trips to Home Depot that kill you. And actually, by doing this, it really tells you where you have to streamline. Because when I told you, he tells you to open up 5 checking accounts, and when you get paid, you pay them sequentially. All right, the money goes into to you first. It goes into the profit, then it goes into the whatever, and the very last thing is expenses. And when you find out you can't pay the expenses, you're not supposed to rob it from the other things. It tells you that okay, you need to raise your prices or you need to cut costs of goods. Okay, so we'll get into that a little bit later.
Well, so far, that's where you got me on this thing.
Confused you or
No,
got
no, no, no. The the thing I think that well, even my family business and me and Pete's business was cost of goods. Yeah, that was all pretty dialed in. The
Mhm,
other thing is where I think we lost focus. Expenses.
mhm. That's I
That
mean,
can be a killer. Like you said, if you're running to Home Depot or you're running to the distributor to pick this up, or every morning, that's how you start your day, having somebody run and pick stuff up, cell phones, gas,
mhm,
just wasted time because I can't mark that up, can I?
yeah, nope,
If I get a guy who's running, let's say it's 4 hours a week, he runs.
yeah.
I'm not marking that up. That's all. That's the expense. That I think is something to look at. I'm glad you mentioned that. Now I'm
Well,
getting that. That is a
so
big one, I think. Cost of goods versus your expenses, because at least on all the cost of goods, we can mark that up to where we need to be for the margin, but we still got to make sure that the expenses are all going to get covered.
all right, now I'm going to stop here for a freaking commercial because this is where I swear to God, when it got me off oil-based finish. It got me off oil-based finish because I you start looking at the amount of trips to a job. And you now you look at chroma stain. I don't care if anybody has any doubts or concerns. Talk to Jeremiah Strong at Bona about experiences he's had on jobs where it saved the guys a ton of time. Yeah, a little bit of a learning curve, but I mean, if you can cut these expenses, and one thing Rob and I always, we're not the smartest guys on the block, but if we can get you to that zone where you're making the most money, and you're as productive as you can possibly be, and use the marketing stuff and everything, man, and just streamline your business. Um, Hopefully, it helps somebody um, not go through some of the hardships that we've all gone through. So, okay.
All right, Wayne, we could do this all day long, but we can't have an hour and a half episode. So let's uh let's kind of phase this out here and stay tuned for next week, and we'll do the second half of this show.